All right, welcome everybody. It is Wednesday, April 24th, 2024. So 4/4/24 is the day today. So good day overall for the accounts. We saw some nice little gains, even though the market dipped. Not surprising. It kind of felt like, we saw the rally a little bit on Monday and Tuesday. We're still in a downtrend. Didn't think it was much more than a dead cat bounce. And then we'll see what happens with earnings. However, we're sitting here after the bell today, and earnings don't look too bueno for some of the stocks. In fact, let's just get into that, have a little fun, take a look at some charts and things that are happening right now. And let's look at Meta right now on the day. So if we take a look at Meta, open the day, ran up a bit, dropped down a bit, still ended, opened up, gap up, dropped, finished off of its lows. But you can see here when we closed at 493, this thing's right now in after hours trading 435, okay, which is going to put us down here. So we're going to go for the gap fill really quickly on Meta. So Meta going to drop significantly. So if you thought stocks were going to be great to be in here, you've got some problems. Let me get myself off the screen so we can see a little bit better. But anyway, RSI momentum's been down, squeeze momentum's been down. The MACD was curling up just a fraction, but look at the weekly here on this thing. MACD falling, overbought and falling, squeeze momentum's coming down. You had no business being long here anyway, unless you were really thinking, if we get a nice bounce off of this support, maybe this thing could run up, but RSI and squeeze was telling you that's not happening in here. So really, if you're in it, you shouldn't have been, at least for a trade, heading into earnings here. And with a run up like these stocks have had from last earnings till now, like a last earnings, huge move, and then just slowly inching its way higher and then tipping over. It had such a big run. There's a giant gap that needs to be filled from last earnings. It's possible you're going to get that gap fill sooner than later. Anyway, terrible day for Meta. What's that doing with to some of the other stocks? And who else did we have in the after hours as well? Let's take a quick peek and see. So who else? Well, let's see how it's affecting anybody else anyway. So Apple, kind of unaffected. In fact, Apple's doing decently. Had a good bounce day. I love what Apple's doing here. Nice bounce. You can see, as opposed to Meta, Apple RSI is improving. Squeeze is changing its momentum. It's been heading down. It's holding support, bouncing off of it. And even in the after hours, it doesn't really seem to care what's going on in the market. All right, so we also had IBM after hours. Who cares? Not really going to look at that. We had Tesla yesterday. Tesla, massive day today. Oops, let's get up here. So Tesla. It is Mesla. So Tesla, huge gap up day today based upon the earnings yesterday, which really, the earnings were okay. Just a good big bounce today. However, in the after hours, doing nothing on the Meta news. So big move, big bounce day for Meta. If we're looking at Microsoft here, you've got this rising wedge pattern that we broke out, very bearish, came down, bounced off the 3 ATR. Weekly still looks very, very weak here. And in the after hours, this thing's down $6 already. Now, tomorrow, we're going to get Microsoft and we're going to get Google, Alphabet tomorrow. So Alphabet and Microsoft are tomorrow. That'll round out the big ones for the week. So we'll see how Microsoft fares tomorrow. But as opposed to some of the other ones, this is limping its way into earnings. Amazon tried to make the run, fell down today, couldn't get anything going in Amazon. And in the after hours, this thing's down $3 on the Meta news. We already talked about Meta, which has just been sideways here for weeks. Google looks good overall. I mean, you've got MACD, RSI rising. here. The weekly looks solid. The daily looks pretty good, heading right back to support, but it is off about 5 points in the after hours trading today. Now, you got Google tomorrow, or Alphabet tomorrow after the close. So you've got earnings tomorrow. We'll see, but you've had a nice big run on earnings since the last earnings, and we came out talking about the how bad really the um, AI search was for them. They've rebounded substantially, so looks good here. We'll see if earnings, did we run up too much into earnings, and do we need a really big, good beat to keep it going? Or even if it's just a beat but not great guidance, do we tank this one as well? NVIDIA taking a beating today. This thing's still in a downtrend, so I'm not sure why anyone's trying to get long or is long in it currently. If you're a trader, now if you're holding it for the long term, fine, and you've owned it for a while, that's fine. However, you've got this gap up level here that's also been support, was support, got broken, was resistance, and then resistance again today. So it's a pretty strong line. Until this line here about 838 or so gets broken, this thing's got more downside to go. I'm not too positive on NVIDIA. Tesla, we've already talked about. Big gap up. We'll see if it can hold this level. So this level here, which was the support, finally broke. We bounced up today, but we couldn't really get above it. We just finished right on it. So we'll see what happens. If we keep moving up, that'll be nice. And we'll look to see if this becomes support again. If not, this may just be a big resistance level and continues our downtrending channel, which is what we've been in for a while. So you've got this bigger channel here, and you've really got another narrower one right in here as well. So lots going on there. Netflix here broke down, gap down, been just meandering around. Pretty good down day today. Momentum's down. Okay. So how many of these did I give you momentum was up on? I thought momentum was decent on Apple, not Microsoft. I guess Microsoft, okay, bouncing, but it broke, so it's in a bearish trend. Okay, what's bullish? Amazon? No. What's bullish? Meta? Not anymore. Google? Yes. NVIDIA? No. Tesla? Not really. Netflix? No. Apple? No. Microsoft? No. Here. So the only things you have to hang your hat on right now is Apple, which is a shell of its former self. But Apple, trying to fight the good fight in here, is going to drop tomorrow a little. We'll see. And then you've got Google, who announces tomorrow, along with Microsoft. So, I mean, Microsoft has a big earnings beat and some great guidance, then maybe this thing can fix itself. But most of these are down right now. If we're taking a look quickly at the sectors, and I didn't want to make it all about this technical analysis, but you had semis bouncing, but still in a pretty good downtrend. So right now, you're just making higher lows. Okay, so or I'm sorry, lower lows and lower highs is all you're doing in here. XLY, your techs, same thing, downtrend. In XLP, it's interesting to take a look at consumer staples. These are looking pretty decent here. Look at this nice move on consumer staples. The weekly, pretty good. We got a little bit of a bearish move the last couple of weeks, but have rebounded strongly this week so far. So consumer staples looking good. Utilities looking very good. Regional banks looking to break the downtrend line, looking good. Oil, a decent pullback, holding and bouncing back above the 21-day. Doesn't look terrible. I'm sorry, tech here. What did I call it earlier? Oh, the XLY, which is your consumer discretionary in here. So on the consumer discretionaries that we had, again, bearish, a little bit of a bounce, but pretty bearish. If we're looking at Biotech here, down. Communications down. This communication is not going to have a good day tomorrow with Meta because it's Google and Meta. We'll see, can Google keep it from a disaster? Other than that, I'm not in that. Financial, this is not bad. I mean, it's kind of a sideways day today, but the improvement underneath this thing has been really good for the last, really the last 2 weeks. Nice hammer candle last week, follow through week this week, very nice. Back above the 21. RSI, MACD, squeeze, all rising. Financials, I still really like them here. Healthcare, still in a downtrend, but it's also improving. Retail, downtrend. And that industrials we already covered. So on the XLI here, so your industrials, sorry, on this. So anyway, that gives you a chance. Biotech, you're just getting absolutely murdered this year. So not having a great year. We had moved up pretty quickly, sold off, gave back all of those gains and more. Nothing good here. If you are trading the NASDAQ, things don't look good. All right, so let's take a quick look at these charts. And I put a couple levels on here. Might be too busy for you. Okay? I don't need the comments. Just don't watch my videos. It's okay. But what I think is important to take a look at here is huge rollover on the NQ, driving all the way down and boom, landed square on this previous pivot high level, okay, yesterday. And then today bounced off, or, last week, I'm sorry. This week, we started with it at the low. We've bounced off it until today. Some improvement in what you're seeing here on NASDAQ, but really, to me, the downtrend is still intact. Okay, and I don't really know that this is super steep either. Okay, it's just a decent downtrend. You can draw it a little bit better, maybe to this previous high here. So, can we bounce all the way up in here? Sure, and still get nowhere, still be in a bearish trend. So you're in a bearish trend now. We are not going to be positive, most likely tomorrow, with the likelihood of what Meta is doing and others after hours. So things don't look great after hours. We take a look at the ES today. ES, well, right now it's down, but overall on the session today was a good up day overall. We're driving lower right now, but we were having a decent day, slightly down on the session. SPX was actually up on the day. ES slightly down on the day, but you're still in a downtrend. Even though you've got a bullish PSAR signal, that's all good until you can't make it above this 50 or 21 or the downtrend line. A little too much there to have to overcome, in my opinion. So I think you've got to still stay bearish. A couple members were asking, well, why don't you close your put debit spread on NASDAQ? There's a little bit of a profit there because this does not look healthy. Okay, so let's let this thing just play out, guys. This is just a dead cat 2-day bounce on a V-shaped bit of a bounce, and I'm not saying we can't recover, but the likelihood of it is not high. Below the 50 and the 21, things don't look good on the NASDAQ, and you're struggling to get back to the 50. You're still below the 21, and the 21's quickly approaching the 50. It doesn't look good either here on ES. Let's check out what oil did today. So oil down again on the day. Okay, a couple good days in a row, and then boom, it gives up a little bit today. Totally fine. I love where we are on oil. Most recent trade we had was we popped a strangle on that sucker yesterday, and that's beautiful. We are up 10, not 10. We are up 3% on that strangle today. So 3% on the strangle in one day already. And then our naked puts are doing just totally fine on oil. I still like oil. Uptrending channel. Unlike the NASDAQ and the and the ES, which are in a downtrending type of a channel. This is an uptrending channel, and you're just at the bottom of the channel. I think this is a good place to potentially reverse and move higher. We'll see what happens. It's a little bit bearish here on the daily and bullish on the weekly. A lot of yin and yang going on. When that happens, I think that sets up great for strangle trades. And the fact that you're sitting right at the 21-day moving averages on both sets up great for strangle trades. I like it here. Okay. Bullish weekly, bearish daily, good yin and yang. Let's let this thing just continue to fight through sideways action. All right, gold. Gold continuing its 3-day plungerama that you're in. So gold topping out, okay, big reversal candle here, another big reversal candle here. It couldn't, bulls couldn't push this thing higher and keep it there. So they finally just gave up on Monday. On Tuesday, we had a hammer potential reversal, but there was no follow through today. In fact, now we're heading even lower, finished at the lows of the day. We're right back to the 21. This is not a major disaster, people. This is just a nice pullback in a beautiful uptrend. The uptrend back to the 21, uptrend back to the 21. Okay, on the weekly, still pretty bullish, but overbought. Okay, no longer overbought here. This is in a nice position. I would like to see a little bit more pullback or some consolidation sideways, and then I think I'll get back into gold with at least some strangle opportunities. But we did get a 112 trade on yesterday in gold. That thing is up 3% in one day already. So 3%, was that right? 8.3%, sorry. So that's looking great. All right, bonds, not a good day for bonds. Bonds continue to struggle mightily here. So bonds still trying to hold on to the 618 fib mightily. Okay, on the weekly, and then if we look at the daily as well, I know there's a lot going on the screen here, but really, look at MACD rising, look at the RSI. It's been just holding, a little bit of a dip today on the down day. Okay, look at the squeeze momentum though. The downward squeeze fired, and the momentum was all down, and then the momentum has started to reverse the last 3 days. Okay, still very bearish on the weekly. Nothing to be surprised about. And you're holding the bottom of this channel, okay? But really, we haven't moved since the 15th. Okay, so almost, 1, 2, 3, 4, 5, 6, 7 straight sessions where we've just held the 618 fib. This is where the bull and bears are just fighting it out, duking it out on bonds. We'll see how things take off. We look at the 10-year note here, and same thing can be said to the inverse, to the upside. It's just a fight here, and no one's winning it. But look at the momentum just coming out of the 10-year interest rates. Okay, MACD falling, squeeze is tipping over. Nothing good here, in my opinion, for a big run, which I think sets up well for us for our bond trades. All right, I just want to add the 50 here. I don't check in on the rates too much because I can see what they're doing here. Let's take a look at, I think we covered gold already, right? So gold, nice pullback to the 21. Copper. So on copper here, big breakout, well above the 3 ATR in a weekly. That's just too high. All right, so you could see the doji candle here. You could see this pretty much this week, this doji candle starting to form here a bit as well. A lot of indecision. We could still go higher, okay, or we could go lower. We're going to need another week to figure it out before things really establish their trend. But right now, yesterday might have been a good day to get back in, but I don't know. If I'm looking at MACD falling, the RSI is falling, squeeze momentum, I think this thing just needs a break. And if we can break and get a break back down close to the 21 EMA, I think this thing sets up nicely at that point for 112 trades, but nothing until then. And then the last thing here on the Russell, on RTY, let's extend this downtrend line down. Okay. And we haven't hit it yet, but there's a ton of resistance right here. Now, on the weekly, Momentum is definitely down. MACD, RSI, squeeze, the charts, bearish piece. So we're definitely in a bearish mode, but we've held really great around this 200, the 50, the 21, this whole little range here. Okay, we haven't broken. We would have to break this range, okay, and back into some of this support, okay, to fall hard. Now, if we fall hard, okay, there's really thin structure, okay, back here, okay, big gap, but underneath it, these are some big gaps from here. I think that's pretty thin volume structure. We could look at a volume profile on this thing, but if you break last week's low at 1916 or so, which would be breaking the 50 or the 21 on the weekly, thin structure, this thing could head lower quickly. However, on the daily, it's a nice bounce off the 21. Okay. Doji candle reversal with the follow through, another day of follow through, and a day of rest today. Let's extend this line out, which was primarily the previous resistance line. This is it. If you bounced up, if we can't break this area here, this 20, I'll call it 2025. If the 2025 can't hold here, down we go. Okay, and could get ugly on the Russell. However, if NASDAQ is falling, okay, that might be good for some rotation into RTY. Why is NASDAQ falling? Well, Meta, no bueno this evening. Okay, Google and Microsoft tomorrow night. Any more bad stuff happening with tech, I think the reversal into RTY is very possible. So anyway, sets up a bunch of stuff for us overall. I think what's also interesting is if you're looking at I really like this chart, the percent of stocks that are above their 50-day moving average on the S&P, you can see very clearly when this thing gets overdone and hits the 90 level, it sells off back down to the 0, back up, sells off, back up, sells off. Okay. Well, the market's been heading down hard in here. We're not to the overdone level, but certainly you're now back down to only about 44% of the stocks are now above their 50, where it was 85 just about 4 weeks ago. So I think you watch this here if we continue to fall. And then if we look at the VIX, VIX might get some action tomorrow, but right now, VIX is just doing nothing. It's back in the 15s. So 1597 on VIX. Momentum's been down all week. Funny, market's been dropping and then rising the last couple days. But as that market's been rising Monday, Tuesday, and then into today, VIX has been dropping. Volatility's coming back out. Okay, so if you had a chance to put on some trades like we did, getting the 112 long-term trade on last Friday, then I think you're in good shape overall. All right, let's take a look at our account and see where we are. See how today went. And then we'll wrap it up with you and we'll get you guys on your way. All right, so today we finished with a delta of 413. For me, it's very delta neutral. Okay, 0.09% of my net lick delta, so very delta neutral, which we love. Okay, and had a good day overall on this today. Theta 1364.29, totally fine with where we are, considering that on ES and where VIX is. VIX sitting at almost basically 16. IVR in ES is elevated a bit at 43. So it's giving us a little bit of juice on our theta, but not everything we trade is ES. And then our net lick, we ended the day at 477.056. Now that was right around the end of the day. The market sold off in the after hours on the Meta news, so it's down probably a little bit from that. But this is now the third straight up day on it, and we've recovered quite a bit on our net lick. We just continue to trade our plan. Buying power dropped today. We did close out some trades. Buying power dropped to 273. So we're now sitting at 47% when we take Bill out of the equation, because about 10% of our account is in Bill, and that's how we like to keep it so that we don't exceed that and we don't earn any margin interest that we're going to have to pay. 47%. We've got money to buy, and we've got room for BP expansion. Right now, I don't need to put on any trades. I feel I got a full book of everything running. So really, I'm just going to let this thing go. We got some trades on yesterday, which are good. So why add any more trades right here? My buying power says you could, but you know what? If the market keeps selling off, I'm just going to let these things just come to fruition here. So I'm going to keep it right where we are. I'm not going to add any new trades in the main trading portfolio here. 1345 to the good today. So again, daily realized. So I had a great time this afternoon with Tony. Tony from Mexico, and Tony is Trading on YouTube. If you haven't checked out his YouTube channel, check that out. Tony and I are very similar people. Okay? We have a very similar philosophy on a lot of things. We're both premium sellers. We both love golf. We both love pickleball. So Tony and I, and we're about a year apart. So I'm a year older, so I got a little more wisdom, Tony, than you. But we went through some things today. One of the things I was talking with Tony, and we'll put that out on YouTube tonight. He'll have it on his channel, and then I'll pop it up as well. But one of the things we talked about is how I love to look at it, to really focus on generating income. Okay, and I've done several videos on this anyway. I just want to keep generating positive income, trying to hit my 2-3% a month. I mean, 3% is my goal. Okay, 2% would be totally fine. 3% though is my goal. I'm not trying to get 5 or 10%. And we even talked that even my 3% is a little risky. So it's a little riskier for some. It's a lot of risk you have to take on to try to hit 3%. And I've been talking about this with members for I don't know how long. Okay, my risk is not your risk. This is my trading account. It's not my IRA. My IRA is shooting for about 1.5%. Okay, I've got a large PM 1 million plus portfolio that's shooting for 1.5%. Okay, the risk is this is just my trading account that I'm using in the Income Navigator service. I can take 3%. Okay, I feel I can manage that pretty well, but it is taking additional risk. But my goal here is continuous realized gains of 3% realized gains a month. And hopefully by doing that, you're dragging your net lick along with you. So right now we are sitting at 13% year to date. This is year to date. This is 4 months in. This is not one day. Okay, so I'm not the guy on YouTube right now that's telling you, okay, that I can make 2% a day or 3% a day or 10% a month. Okay, I'm the guy telling you that you should be looking for like 1.5 to 3%, depending on your risk tolerance and your goals. Okay? If your goals are to make more money in a shorter time frame, you're going to have to take more risk. If your goals are a longer time frame, you take less risk. Okay, and you let compounding do all the work. I'm really letting compounding do most of my heavy lifting, but I feel I can manage this portfolio, be diversified enough, strategy, days to expiration, and assets. But if I can generate 3% in realized P&L a month, I should be able to grow my account net lick-wise over time by 3%, okay? Or at least get doggone close to it. And I'm also spending 0.5% on my hedges, all right? But my net lick is up 12% year to date so far. So we're right on it. I mean, we are right on. We're not at the end of April, and I'm already at 12% for the month. So I'm right on my goals. I'm not blowing them out of the water. We're not up 20 or 30%. Okay. We're just nailing our 3%. We are right dead on it from a net lick perspective. We're slightly ahead with realized P&L, which is normal because typically I'm booking winners and losers are still on the books. There's not a lot of losers, but there's some, which is dragging the net lick down. But as those things start to turn around and become winners and I take them off, then the net lick starts to rebound. So we're in good shape. I love where we are with all of the Greeks. I love where we are with our buying power. We're under 50% now. So I think we're in pretty decent shape. In fact, I'll share one more thing with you guys and then we'll get running for today. I like to share my allocations. as well on the different trades. But let's cover what we won at today. So 1345, 3 winning trades. So the first trade of the day was just another simple 0 DTE winner. We've been in great shape, 0 DTE. In fact, I always like to look and see how we're doing. But 0 DTE, we've won 33 out of 35. Okay, on the year, we're at 94.3%. Pretty good for 0 DTE traders. And I don't think I'm doing anything crazy risky, although maybe just trading 0 DTE alone is risky. I'm doing it my way. Okay, I'm not copying anybody else's stuff out there. Okay, and it's working pretty good. All right, so number one, 0 DTE winner, $300. We put that into play. We also closed a ratio spread on the Russell for a 48% premium capture. So 50% was the goal. By the time we have to, on Tasty, we have to leg out because both legs are separate. But hopefully in the next 2 weeks, I've heard Tom saying that we're going to be able to enter multi-legged trades as one trade. And hopefully that's going to help us with a lot of this slippage. The 112s are ratio spreads. Can't wait till that happens. We'll wait and see. Hopefully that happens. All right, but nice winner there. And then another nice winner here on wheat. We had a put spread on wheat. We went out on this trade about 75 days. We took it off in 16 days. We had a 57% winner here, over 15% return on margin. And so these are some of the spec trades that we're putting on. Ratio spreads in Russell, long-term put spread in wheat, and then some 0 DTE. Not all my eggs are in the 112 basket. Okay? My eggs are spread around a lot of different areas. And one of the things I always take a look at here is, hey, what's your allocation look like? 23% in ES, 22% in oil, 20% in bonds, 6% in gold, and then a smattering of other things, and then 17% in bill. Okay, love where I am. From a diversification standpoint, my span margin loves it. Okay, it gives a lot of stability to my portfolio. I'm not in just one type of an account. Now, this is the larger account. In smaller accounts that I have, that we're helping traders with their smaller accounts, like $10,000, $20,000 smaller accounts, $30,000, $40,000, $50,000 small accounts. Those accounts, you don't have as much flexibility to do some of those other things and get into a lot. So you've got to stick with, whatever trades. And one of the things too that we talked about today is campaign style trades versus opportunity or discretionary trades, however you want to phrase them. And I'm a hybrid trader. So I've got the ES 112, okay, campaign style trade. I've got a 120-day trade, and I've got a leap puts trade. Okay, those are campaign trades. You put those on pretty much irregardless of the market, based upon time or based upon closing a previous trade. Okay. So some of those are campaign trades, but then the winners that I had here, even today, gives you a sense of, all right, I've also got strangles, which are not necessarily campaign trades, because I'm not putting them on a time basis. I'm just looking for any underlying that fits my criteria. And I like to diversify my strangles. So I've got strangles. I've got ratio spreads. I've got put credit spreads. We've got naked puts. And then we've also got 0 DTE trades. So there's a lot of different trades we're putting on to diversify, not only by asset, but by strategy, okay, and also by days to expiration. So within those, multiple different days to expiration, multiple different risk levels, all of that stuff together, I think, strengthens the safety of the portfolio. Doesn't mean we can't go down. We get a huge vol spike. We could be in trouble tomorrow. We do have hedges on. I'm still sticking with the 112 and not a 111. However, I am trading 111s in the IRA. Okay, because I don't need to hit 3% in an IRA, okay, but I'm also not trading them with a very high delta, which cost me back in 2022 when I had a couple 111 trades on and they got burned because the deltas were too high on a pullback. But the 112s never got touched in 2022 in a bearish market. Okay. And that allowed me to really crank up an 82% winning year. Will that ever happen again? Doubt it. Okay. It's not my goal. My goal is 30% a year. However, if it happens, it happens. It's only going to happen, okay, if we start to hit some traps on our bear traps, or we have an opportunity to really hit some good spec type trades that's really adding to the bottom line, but that wouldn't be enough to get me to that 80 point. You've got to hit a ton of traps, and that's what we did. All right, if this was helpful to you and you like what you're hearing here, please give me that thumbs up down below. Could really appreciate it. Get the word out. It helps me, helps this channel, helps us reach more people, and we can help more people. Put a plan together that makes sense for you, your goals, your risk tolerance level. It's going to keep your emotions in check. We'll help you do that. That's what you need, okay, to become a successful and consistent trader. So give us the like button. If you're not a member, subscribe here on the YouTube channel. If you want to check us out in the Income Navigator trading room, go ahead and go to the Income Navigator link that's in the description below. Use KING as your discount code. Kick that in. It'll take $50 off your first month. Okay? We'll make you more money in the next 30 to 60 days, okay, than you'll need to, for your subscription for the next several years, okay? What do you got to lose? Come and join us. Come and help increase your own educational level and get into a great group of people with like mindsets, premium style, premium selling traders, premium style and premium selling traders, theta traders here that have a great understanding of how to run their portfolios. All right, we'll see you guys later. Enjoy a great rest of your evening. Bye-bye.